Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's take a look at the gold market. Well guys, on the gold market it's not much to comment. Currently, as you can see, that previous week was rather flat, so market in fact stands in the tight range and calling around. So we could say, probably acknowledge that still this target of this ABCD patterns, you can see 1618 extension, was able to keep market from the further downward, immediate downward continuation. So you can see the market is calling around it, and probably market has found some support here. As you can see that market stands in the tight range. Well, these different spikes up and down were mostly due to some events. So here was the starting of the bombing in Syria. That move down was due to the revision of the gross domestic product numbers on Thursday. But in general, market still stands flat. At the same time, in our weekly research, we have mentioned the recent CFTC report that in fact shows the same picture as a week before. We see that open interest has grown again, so the investors put new money on the on the gold market, and simultaneously we see the decreasing of the net long position. So although the gold market is still net long, so the long positions are greater than the short one, but gradually the net long position is decreasing. So the new shorts were opened and some longs were closed. If you would like to know details, you could read our weekly research, and there are some charts of the recent CFTC report on the gold market, and you can see the particular numbers and how in general the dynamic of the bullish and bearish positions on the futures on the gold look like. So taking into consideration these numbers, we could suggest that any spike up and any attempt to move high will be just the speculator's game, and since market feels lack of the physical demand, hardly any rally will take the continuation. If you remember, this spike on previous Tuesday was looked first very impressive, but within the couple of hours after it has happened, it was really blown down and market closed flat, and this action haven't got any confirmation and any continuation, and that probably will repeat again if any attempt to move high will be taken by the speculators. On the coming week, we will get some important data, so that will be the non-farm payroll release and also ADP report. And today, guys, we will get the consumption PCE index, personal consumption expenditure index. That also very significant when investors monitor the health of the economy. So growing in consumption is the good sign for the economy. That is what we will be looking today. In general, probably as market will coil here around, that will be market could build some energy before some significant action. Maybe this action will be as the quintessence of as the external as internal factors. For external factors, we could speak about the fundamental data that we have just talked about, and for the internal, that could be some stops that will be open around by the traders who trade in the range, some one cancel other stops above and below the market, and with this quintessence, after that the market makers could take the final attempt of the breakout and use these stops that have been placed and will be placed below these lows as the additional fuel for the further downward action for the breakout of the 12 even area. Because as we said, it's very hardly we could believe that market will leave 12 even and ABCD target in the 1180 area without washing. We think that any reversal and deep retracement will be possible only when the market totally grab the orders around this major low 1180s. That the moment that we will expect during the nearest future. Also, guys, as you can see on the hourly chart, we previously talked about the possible megaphone pattern here, but as you can see, it gradually is shifting to the diamond pattern. Diamond pattern is very rare and it on the market, and personally I usually avoid to trade these patterns because in most cases it fails rather than works. At the same time, this is hourly pattern, and for hourly pattern will be enough some minor exit to the upside to be completed, so show to the upward action. At the same time, we do not believe that this pattern could lead to really significant retracement up and significant reversal on the market, mostly due of the data that we have on the sentiment of the market. So the CFTC report, the SPDR fund storage absolutely do not confirm the possible reversal in the market right now. That's why if any action to the upside will happen, it will be probably short term. That's why by this reason, be extra careful if you would like to take the long position based on this dynamic pattern, and we would probably call you to not bet particularly on this pattern, do not take the part in the trading of this pattern, because currently guys, if we take into consideration the factors that we have just discussed, it's more chances on possible failure of this diamond, and the chances on the downward breakout seems more probable if even market will show some attempt to move high here. So be extra careful with this, and probably it's better to skip this, but as usual, the final choice is up to you.